Good afternoon or morning from where you're dialing in. And my name is Joseph Ishii of the American Business Council, and which is the voice of American investments in the country. And on behalf of the council, we would like to thank you for joining in. Today, we'll look at the shift in consumer behavior, the implications for business and policy. Before we deep dive into the discussion of today, I would like to briefly share the housekeeping rules and introduce our guest. So the session is brought to you, it's been organized by the American Business Council and hosted by MasterCard. So a quick one, if for the housekeeping, so one, if sending your questions during the Q&A, and when sending your questions, please identify yourself and your organization. If you want to speak during the Q&A, kindly signify by raising your hand, and then relevant materials, resources will be made available to everyone after the webinar. So our presenter today is Bola Asiru, the Principal and Divisional Lead at MasterCard Advisors, Sub-Saharan Africa. And just to give you a brief overview of who Bola is a, as earlier shared, is Divisional Lead for MasterCard Advisors, business for Sub-Saharan Africa. He leads a diverse team of experts that provide payments and digital strategy advisory for private sector and governments across the two countries in Sub-Saharan Africa. Prior to MasterCard, Bola was a director at Deloitte and led the strategy and innovation consulting practice for West Africa. His sector expertise cuts across financial sectors as well as telecoms, retail, automobile, transport, public sector areas. He has also worked at senior levels with leading financial institutions in the UK and Nigeria, including Legal and General Investments, Barclays, Credit Suisse, and United Bank for Africa. Bola is also an alumnus of Harvard University, London School of Economics, Political Science, and the University of Lagos. Without further ado, I would like to welcome Bola Asiru. Hi, Bola.
Hi, Joseph. Good afternoon.
Good afternoon.
Okay. Good afternoon to everyone on the call, and I'd like to say a big thanks to the council for giving me the opportunity to present this paper. We can go straight into the agenda page. We don't have much time. I think I have about 20 minutes or so. So I'm out of the macro perspective. I'll then speak to some of the key trends that we are seeing from a consumer behavior perspective, and then dive into the so what, i.e. the implications for business leaders and also policymakers. And I'll round it up with a very brief case study that brings all of this together in an example. Next slide, please. So we are definitely living in interesting times. We see that consumer preferences and behavior are shifting in response to COVID. I'm sure some people on this call are dialing in from home. I'm definitely dialing in from home. Of course, we've had to adjust our lifestyle and our businesses. So the two questions we really want to answer this afternoon is how must business leaders respond, and what is the support we need for our policymakers and stakeholders. Next slide, please. Next slide. Thanks. So now, previous slide, please. So from a global perspective, it's clear that the entire world is under pressure. I think on the left, you can see some of the growth projections for some of the largest economies in the world, right? So I think apart from probably China, that the EIU has projected to grow at 1.7%, everyone else is primarily on a decline, right? So majority of countries are not expected to return to 2019 growth numbers until another 3 to 4 years. In Sub-Saharan Africa, I think the growth is going to be led by East and North, and then the West Africa and Central will follow. South Africa, as we know, has been unfortunately the most affected in terms of COVID, and are likely to return still into growth next year, but at a slower rate. West Africa return to growth next year. Of course, Nigeria is the biggest economy here, but some of this return to growth might be dampened by commodity price decline we're seeing. We say all of so we going forward today, these are the projections that we see. Next slide, please. Can we have the next slide, please? Hi, Joseph. I'm not sure if you can hear me, but if you can move to the next slide. Thank you very much. Okay, so coming closer for Nigeria, we see again our GDP is on a decline. All other indicators, whether it's our official FX rates or the parallel market, whether it's our inflation numbers or employment figures, it's all unfortunately majorly on a decline. So we are into some headwinds, but we still see some sectors showing positive growth year to date. And I'll take you through this in the next slide. So agriculture, I'd like to spend a bit of time on this, was a major contributor to Nigeria's GDP last year, about 25% of the GDP. And of course, we know the criticality of this sector, but last quarter, we saw a growth decline. There are 4 subsectors within agriculture: livestock, forestry. Crop production is quite critical, of course, because of the impact it can have on inflation and also food security. And we need to watch this particular subsector in Q3. But as we see it today, it's not too encouraging that we have some declines in this very critical subsector. Next slide, please. The next slide speaks to financial services, which is, very important to all of us, I'm sure. We've seen phenomenal growth in this sector for obvious reasons, particularly from a payments perspective. If you look at the two slides, the two bottom slides on the left, this is statistics from NIBS. You see amazing growth in mobile transactions and also POS transactions. In fact, if you look at the last 4 years, the largest numbers ever experienced in the last 4 years, right? If you look at July numbers, it was over $1 billion of transactions for POS, about 416 billion naira, and 275 billion for mobile. So clearly, the increased use of digital and mobile platforms has also had a positive growth impact on telco. You can see telco on the right, the last couple of quarters, because all the things we're talking about with regards to payments sits on rails that the telcos provide. So this has also had a knock-on effect on telco in terms of growth. Next slide, please. Our next slide will show that other sectors have also started to experience growth. Clearly, healthcare, pharmaceutical, that goes without saying. That is a priority for everyone at the moment. We expect this trend to continue in 2021. Other sectors like broadcasting, obviously because of the stay-at-home period, have shot up, and also courier services, postal services, because of the reliance on these service providers to get goods and products across to consumers, has also shown a growth in Q2. Next slide, please. Now, what does all of this mean? I mean, I've shown some growth in some sectors, some decline in some sectors, but this growth and declines are not happening by themselves. They're happening because consumer preferences have changed, either in a positive or a negative way. So we've tried to summarize for you this afternoon the key changes that we've seen from a consumer perspective. A lot of it, I'm sure, are familiar to you already, but it's important to go through them. The first one that we've seen is rising concern around cash as a payment form. A few months ago, the WHO, the World Organization, came out with a statement that encouraging consumers to use cashless forms of payment for the hygiene reasons, to reduce the spread of the virus through contact with banknotes and everything else. So the key shift that we've seen is the psychological impact that this has had on people with regards to handling cash. There's a natural preference to make non-cash payments, either to person or person-to-merchant payments. So that's one major psychological shift. The second shift that we've seen is a growing preference for e-commerce. Obviously, we live in a time whereby the less physical contact you make, the better. So we see consumers are aligning with e-commerce, both for local and international purchases. Now, for the international, it's even more fast-tracked or more prevalent because obviously we cannot travel at the moment. So we're seeing a lot of e-commerce transactions with international merchants for delivery to Nigeria, right? So e-commerce is no longer a fad. It cuts across multiple segments and age groups. It's now become a necessity for certain segments. Then finally, on this particular slide, we see that consumers are now more focused on essentials. Even though the lockdown is easing, people are still stocking up on essential food items, healthcare items to stem against any potential future lockdown. So luxury and non-essentials have taken a backseat in terms of consumer preference. Next slide, please. And we're also seeing beyond e-commerce that digital is getting physical in terms of work and lifestyle. So like I said, many of us are working from home. Our entertainment, whether it's streaming movies instead of going to physical cinemas, or it's webinars like this, getting a degree online or a certification online, it's really become prevalent in our world. And of course, there's a growing dependence on reliable connectivity, and people are also investing in their work from home environments. From a broader health perspective, it's one thing to be concerned about contact, but it's also one thing to note that a lot of people have come to realize that lifestyle diseases such as cardiovascular diabetes and everything else actually reduce or increase the likelihood of death from COVID. So people are getting fitter, people are investing in their health and also eating healthier. So from a consumer mindset perspective, there's now value being attached to healthy living and healthy lifestyles. Finally, one other shift that we're seeing is increased trust with courier and delivery services. A few years ago, one of the biggest challenges that e-commerce companies had was the fact that there was a weaker link between them and the consumer, which was the delivery service link. Now that has been professionalized. There's a lot of structure in the industry, and there's a lot of strategic partnerships being formed between e-commerce providers and delivery service companies. I personally have not had any issues with regards to deliveries during this lockdown. It's been excellent. So we're seeing a real shift in terms of trust for the Nigerian consumer in this regard. Next slide, please. So I've spoken a lot about the macro. We've highlighted some of the shifts that we've seen. But now this is to answer the so what. What does this mean for all of you who are leaders of your businesses, who are investors in Nigeria? And I'll speak broadly about what we feel needs to be done from 3 pillars. But I also want you to appreciate that as an organization ourselves, we're practicing what we preach. So some of these, rather all of these, are things that we are also looking at as an organization to make sure that we're meeting consumer needs. So the first pillar is around strategy revalidation. These are not normal times. These are not traditional times, so we cannot be deploying normal or traditional strategies. It's so important to step back and revalidate the business strategy and budgets to ensure that it's relevant to changing and evolving customer. Our strategy needs to be obsessed about customers, what they want and what they need. So it should always be an outside-in strategic revalidation. The second point on this pillar is with regards to digital. We need to revalidate our business strategy to embed digital. It reminds me of a very popular fashion chain in the UK that has never had a digital platform, never had a digital strategy. They've done well through their physical outlets, but they've really suffered in the last 6 months. So regardless of the type of business, it's critical to embed digital in the strategy. The third point is around flexibility. It's critical to have a long-term strategy and vision. Absolutely, that's what the board and shareholders expect. But it's also important to have tactical action plans that can respond to an unpredictable market. It's really yes, we must think long-term, but we must also have tactical plans to respond to short-term changes. The final point on the strategy and revalidation piece is around innovation and partnership. I think it's a misnomer to think that innovation must always come from within the organization. It can also come through a partner, right? It's the application that makes it innovative. So we should be ready to deploy more dynamic business models through partnerships and alliances. We don't have to reinvent the wheel. If we have a partner that's created something that works, that makes sense, that transforms our business, we should form those partnerships and alliances. The courier services aligning with the online merchants is an example of how consumer needs were met through innovation and partnership. Going to the second pillar, this is very close to our heart. Data and analytics is absolutely critical in a world where you cannot use previous data to predict what's going to, you cannot use current data to predict what's going to happen in the future. So data is king. Ensuring that decision-making and strategic bets are data-driven and not based on emotion is absolutely critical. At times like this, it's very tempting to just make emotional decisions. But when you have data and you're able to analyze that data in a very critical way, your strategic bets are more likely to succeed. On that point, investing in predictive analytics, so whether it's propensity modeling to look at all forms of consumer behavior that can lead to a purchase decision or a purchase decline, it's a worthwhile investment for organizations to invest in predictive analytics. The last point on this pillar is absolutely critical. As we see the increase in online and digital platforms, we'll also see increases in cybersecurity issues and also fraud attacks. So prevention in this case is definitely better than cure. Fraud prevention platforms are critical investment for organizations that have decided to invest in a digital strategy. The last pillar speaks to marketing and customer engagement. The voice of the customer here is absolutely critical. We need to listen to our customers and give them multiple channels through which they can engage. Whether you have online forums, surveys, what have you, but we should not be repositioning our business without really listening to the voice of the customer in terms of the pain points that they feel and what they want. Related to that is extreme and detailed customer journey mapping. Every customer within your pool has a different journey, depending on which segment they belong to. And we should try to those journeys and ensure that we truly understand the pain points that they feel in order to support them better. The third point on this is with regards to rewarding positive consumer behavior. Where there's a consumer behavior that's positive, that adds value to society at large, adds value to your business, it should be rewarded to build in loyalty and patronage. And finally, this is with regards to marketing and communications. At a time like this, we really need to be, again, mindful of the fact that this is a very difficult time for consumers. Our marketing and our communication must show empathy, and we should be able to engage with our customers at a point that means as much to them as it does to us. Now, all of these three pillars sit on a very critical foundation, and this foundation is around the policy framework that is driven by a lot of our stakeholders externally. There's just 2 points that I want to make here. One key one is around ensuring that there's consistency in the guidelines that are set out for policymakers. When I say consistency, if you take, for example, the fact that in Nigeria, we have a cashless policy that's been driven. A lot of people have keyed into the cashless policy. But at the same time, if a gentleman goes into the gas station to buy petrol over 10,000 naira, he's quote unquote penalized for being cashless. He has to pay an extra 50 naira tariff. Now, this, from a consumer perspective, this is inconsistent in terms of the cashless policy guideline. So we just need our policymakers to align those guidelines so that the consumer is not penalized for positive behavior. The second point around the policy framework is the fact that there's an opportunity for greater public-private partnership. The private sector is engaging with consumers on a daily, on an hourly basis. We have a lot of insights, we have a lot of views as to how the consumer feels, and there's a great opportunity for policymakers to partner with the private sector to get these consumer views before policy guidelines are released. Next slide, please. Good. So we've spoken about the macro. We've gone into what this means from a consumer behavior perspective. And we just spent the last few minutes talking about how businesses can respond around their strategy, their data, their marketing, and also what expectations are from a policy framework perspective. So the last slide here is really just a case study that brings everything together. And I want to speak about contactless payments in response to consumer behavior and consumer needs. And when I say contactless, I just want to define it because we've seen in some publications, contactless being referred to as even your standard card payment where you insert in a POS device and you tap in a PIN number and all of that, where there's a lot of physical contact. We're not talking about that. We're talking about a type of payment transaction that's concluded by a simple tap of the payment device, whether it's a card, a mobile phone, or a wearable device. Tapping it on an acceptance terminal without the need to enter a PIN or without any need to touch the device. So from a health and safety perspective and from a convenience perspective, it's a 10 out of 10. So what do consumers want? What are we hearing consumers speak about around this time? Speed and efficient transactions. People want to reduce their time on the queues in supermarkets, grocery stores, and what have you. Consumers are also clamoring for anything that reduces their risk of transacting. So when I say risk, I mean from a physical contact perspective, coming into contact with COVID-19 virus. So anything that can reduce that risk is welcome by the consumer. Consumers today also want payment solution that gives them convenience and access to other closed loop merchants. I'll give an example. There are a few toll gates that we have in Lagos today. If you don't have the payment card for those tolls, you can't really get. You have to rely on cash, and it's even sometimes it's a cash that's linked to a penalty. But with contactless, just as we've seen with the London Underground, with your debit card that's contactless, you can essentially just tap on the device if the merchant has provided that functionality and just drive through. So these are the consumer's wants summarized. But the solution is actually here. Those of you on the call, if you have your debit cards close to hand, if it's a Nigeria bank issued debit card, maybe just pull it out and look at the top right-hand corner. More likely than not, you'll see the contactless logo. So your cards, most issued today are actually contactless. And you can make these contactless transactions abroad, right? You don't have to enter a PIN and you don't have to actually touch anything. So from a health and safety perspective, it fits consumers' needs. It's faster, safer, and just more convenient. So the question is, why is this not prevalent? Why is the contactless card not out there and being used from a transaction perspective and meeting customer needs? Well, the main issue is that there's a bit of a gap between what the industry stakeholders have defined in terms of transaction limits and what the consumer actually needs. Also, in terms of use, most times you try to use your contactless card today, you'd have to still have to enter a PIN. You still have to physically handle the device, which kind of defeats the purpose, right? So what needs to be done? And we're already doing this. Again, from the two perspectives we spoke about earlier, we're working with our policy makers to look at the current transaction limits to see how it can be increased to a more globally accepted level. I think on the average, it's circa $25 limit transaction per transaction. And we're also working with our stakeholders on the business side to ensure that we can respond to consumer needs and apply the limits that will, in line with global standards, that will make life easier, safer, and more convenient for cardholders. So that's my last slide. Thank you very much for your attention, and I look forward to your questions.
Yeah, thank you, Bola. Okay, so if you have questions or you want to speak with the with Bola. Kindly signify. Let's see. Go through the chat box. Since no one has sent in the questions yet. Okay, someone has a question, so I would unmute you, Odika Ocholi. Okay, we're seeing a lot of hands. Fumi Ogunlesi. So I'll start with Fumi Ogunlesi. Okay. So, Fumi, I'm going to see you're muted.
Can you hear me now?
Yes.
Okay, yes. Thank you very much, Paula. Very, very interesting, very insightful. I mean, I work in a bank. I work with Citibank. And I fully understand your comment about the drivers that are being created by the pandemic. And many of those drivers actually existed before and have just been hastened by the pandemic. Digitization, and those changes in consumer behavior were already on the way. My issue is, using your case study of the contactless. As again, I say I work in a bank. One of the things that we found that has increased in tandem with the digitization, the health imperatives and so on, is also cybersecurity and fraud, just like you mentioned. We're seeing, because a lot of people are using, applications, that they have not used before. And a lot of these applications have been designed in a way that are not yet as robust, cybersecurity-wise, safety-wise, fraud-wise. So we're seeing a large increase in cyber fraud, especially with online transaction and some of the applications of the payment intermediaries. Therefore, I get very nervous when you talk about contactless, because some of the issues that, and it's got to do with culture. I know that in the UK, contactless is a no-brainer, but I worry about the here, whether we've considered before we go and say let's a new product, it needs to be cybersecurity robust. It's just one of my that's just a comment.
Hi, Fumi. Thank you so much for that comment. Very valid one. I like the fact that you mentioned culture. I think culture is one thing, and then also there's probably work for all stakeholders, including ourselves, actually, around awareness and sharing information. Because of the contactless nature and the fact that you don't have to enter a PIN, there's already a bias or a fear that, oh, if my card gets into somebody's hands, they can just, tap and go, and then I'm, out of pocket. But statistics and data shows that contactless cards, fraud from contactless cards is actually significantly less than fraud from other payment forms. In fact, it's one of the least. And that's why if you globally, you see slowly other countries have started increasing their limits on, I think even in the UK, it's been recently increased as well. In Africa, other countries in Africa have increased their limits, in the UAE as well. So it's a very valid point that you've raised, but I think from the data that we've seen, it's actually one of the safer forms of making payments in terms of exposure to fraud and risk and all of that. But the key takeaway, and I agree with you, is that more awareness, more communication in terms of those statistics needs to be done.
Yeah. Okay. Great. So I have a question from Mr. Tunji Oyebanji, the CEO of Lovon PLC. He asks, why haven't we seen the same success that we see in a place like Kenya with the M-Pesa platform? Right. Okay.
Thanks, Mr. Ivanji. And again, I think it depends on how we define our success. I think I shared some stats from our POS and mobile transactions just a moment ago, and we can see the growth. I think some of the moves that the government has made with regards to payment service banks, with regards to regulation, some of the positive moves they've made will yield fruit. I think most of the success that we see in other climes are also based on the regulatory guidance and the regulatory support that they receive. And we're seeing a lot of improvement from a regulatory standpoint. But it all depends on how we define success. I think the last year we've seen significant improvement in terms of alternative payment forms, and it continues to grow.
Okay, so I have Odike Ocholi from Procter & Gamble. I'll be unmuting you.
Okay, thank you very much, Joseph. Thank you very much for this insightful presentation. So my question goes back to, I think, your first or second slide where you talked about the forecast for the regions. And according to what you shared, it's like you're saying that the North and East Africa are tipped to grow ahead of West Africa. So I just wanted to just know what is the reason behind that, and does the regulatory framework there, has a serious impact on? And then that's just what I want to know. What is actually driving that?
Yeah. So those predictions are from the EIU, and I think the main reason that West Africa probably will be lagging in terms of that recovery is in terms of our dependence on commodities, oil. As you've seen, there's a lot of pressure on oil. There's devaluation. There's devaluation everywhere, but I don't think there's any country in our space that's devalued as much as Nigeria in the same period. Right. So yes, there will be return to growth, but it's dampened by those other issues that we've discussed. I think also South Africa, like I mentioned, is probably the most hit. So their own recovery is going to be a bit slower. But again, this is based on the data the EIU has as of today. If things change with regards to commodity prices, also East Africa, as you know, heavily reliant on tourism. If the travel channels open up, as we expect that they will in the next quarter, or rather in the next few months, again that will help their improvement. But overall, in 2021, I think overall it's predicted that we'll see growth, but in terms of who leads the growth, it's currently East and North Africa.
Okay, thank you.
Welcome.
Okay, so I have someone's raising Michael Annie. I'll be unmuting you now. Okay, go ahead. Please introduce yourself.
Hello, can you hear me? Good evening.
Yes, we can.
Okay. My name is Michael Ani, and I'm an analyst with Business Day Media. So I just wanted to touch about the dollar liquidity issues we've been having. and how it's going to affect businesses as well as consumer spending, and how businesses can strike a balance between the higher inflation we're seeing, because we're still going to expect more inflation coming due to the dollar shortages, and increasing the price for their goods, striking a balance between the weak consumer wallet and probably increasing the price of their goods that is going to arise from the dollar illiquidity issue we're having. Thanks.
Yeah, Michael, I think it's a fantastic question. I think we spoke to it. We're already seeing consumers and businesses adjusting, right? So as you know, a lot of the banks have already reduced the monthly transaction limits on USD spend. You know, that was the first response that we saw. Obviously, consumers have had to adjust accordingly. But the data and statistics that we see we also see that in terms of the baskets, right? The basket of goods that people are buying more smaller value baskets, right? You know, so the transactions are frequent but smaller value. So consumers are already responding to the pressure. Obviously, the things that drive, you know, it's unless we have a crystal ball, we can't really say, but the things that drive this are commodity price, our foreign reserves, and our debt management, which I know the government is trying to do their best, and all the agencies are doing their best on all those drivers. But really, it's very difficult for us to predict what the future will look like in that regard. But you can already we see it on a daily basis. Consumers are adjusting their style, their spending patterns, and their habits because of the FX and dollar pressure.
Okay. Looking at the Q&A chat box, Wale Adeleke has a question. It said contactless card, still on the contactless cards, what are the features in these cards that makes them safer than the contact cards actually? Then a second question from Dominic. So what additional investment is required to develop the contactless payment mode as an alternative payment mode? What kinds of infrastructure investments are needed? I think that's what Dominic is trying to say. So yeah.
Okay. So I'll take the first. Maybe I'll take the second one, then I'll answer the issue around safety. But in terms of infrastructure investments, currently, like I said, the cards are actually available and they are working. So they are our issuers, our partner banks are issuing these cards. There are devices already in place that can receive the contactless payments. The challenge, though, again, to Fumi's first question or observation, the challenge is around awareness. So I've tried to use a contactless card. I was still asked to enter my PIN, right? It defeats the entire purpose, right? So really the infrastructure is already there. We just need a deepening of the acceptance terminals. And then we also need all stakeholders with our policymakers to say, do you know what? Let's increase the limit, which is like almost zero at the moment, right? Let's increase it to a value that makes sense. Maybe it's 2,000 Naira or 1,000 Naira, but let's at least start so that people can make, for low value transactions, they can make this contactless payment. So the infrastructure is already there. You can use those cards abroad, but sadly, you know, in Nigeria, the limit is almost set to zero. Only 0.001% of all transactions today are done with a contactless card, almost zero. So there's definitely room to improve on that. There's a question with regards to specific features. I think it's not necessarily about the features of the card, but it's just the fact that from a risk perspective, you're actually more at risk if you have, say the transaction limit is, I don't know, 5,000 naira, and you have cash of 20,000 naira. It's like asking the security features of that cash. It's almost zero. If you lose that cash, it's gone, right? But for the card, if God forbid it gets into the hands of somebody else, it's limited to the transaction limit on the card, right? So there will always be. We can never eliminate the risk of fraud. We can never eliminate it. As soon as technology improves, the fraudsters also improve. But the point we're trying to make is that data has shown us globally that fraud from contactless is the least, that in terms of all other payment forms out there. Hello, Joseph. Still on?
Yes, I am. Great. Back to the first question. I think what Sunji was trying to say when he asked about success rate compared to Kenya with the M-Pesa platform, I think it's has to do with financial inclusion, like with the rate at which M-Pesa has is being used in Kenya, right? How are we, like, what's the story around our own penetration rates, right? So with COVID, has it improved with or post-COVID, would it just damp down? So I think that's where the question is coming from.
Okay. Yeah, so I think just to add on to what I said earlier, I think if it's about financial inclusion, I think one area where we're seeing again a lot of growth is in the Kiko agency model network as well, which brings a lot of this together for people who are obviously are not even able to access mobile phones or smartphones, are now able to cash in, cash out using the agency network. Again, like I said, these are all things that industry players have done in response to financial inclusion numbers. But like I said, in terms of how we rate success compared to other nations and other devices, how qualified, yes, but definitely seeing growth, we're definitely seeing improvement, especially through the agency networks that are supporting Kiko.
Okay. Okay, so let me check. I don't know, Michael Arnie's hand is up from Business Day. Michael, do you have a question?
No, my question has been clarified. I think it was the hands I raised before.
Okay. Perfect. So I think we've run out of questions, actually. Questions. Okay, so someone has a question. Patrania. So I'll be unmuting Patrania. Give me a sec. Patrania, please go ahead.
Good afternoon. My name is Works Onama. I'm from Resilience Life Resources, a development and coaching organization. Did some work with Howard University when I was in the United States, so very happy to hear that connection, Bola. Howard is a great school. We even see Kamala Harris coming from there, so go Bisons. Yes, thank you so much for the session. What piqued my interest is need for cybersecurity expertise in companies in West Africa, north, south, every direction. And I wanted to hear from you. My understanding currently is that many companies are doing it reactively. When they have a breach, they jump in or they try to get a consultant, and it's a lot of lastminute.com. So I'd love for you to comment on the challenges and the opportunities that you see in that space from a career perspective. And really, are companies doing? Are they just seeing that, yes, I need cybersecurity, and they're waiting for something to happen? Or are you seeing some proactive strategies in place? Thank you.
Thanks, Katrina. That's an excellent question. And like I said, particularly with the growth we see in digital, cyber is absolutely critical. The guys that are on the other side, that trying to break into banking networks and networks of other businesses, they're not sleeping. They're very active. They're investing. As soon as we get better, they try to crack it. So it definitely must be a proactive strategy. We're seeing a lot of improvement with our partners. I think there's been a huge shift in terms of how banks and other players, businesses view cyber security. Massive shift in a positive direction in Nigeria, right? So banks are actively investing in it, investing in training, in awareness around this space. We, as an organization, we see this as one of the biggest challenges, obviously, to our world today. So we're heavily invested. A lot of our with companies who are leading in cybersecurity and fraud prevention. So we're inorganically expanding in that direction. Today, we have a service we provide to our partners, which is called a Cyber Quant, where we go into our banks, we essentially go through all their policies, processes, procedures, and give them like a scorecard on where they are. In terms, if there's a potential attack, this is how well you would do. So almost like a dashboard, like a scorecard for them to then improve. I recommend, for organizations to do the same, to have a look at where they are, their internal policies, their processes, to make sure that they are always ahead of the game. But it is a critical area for business leaders to invest in, and it's not something that is owned by a consultant or owned by one department. It's something that must be owned by everybody in the organization, because the entry points can come from absolutely anywhere within the organization.
Okay. Thank you very much. I really enjoyed appreciate the scorecard aspect going into banks. I think also other employees and types of business need to think about it, since we all are relying on the same highway. So I see it as an area for growth, but thank you very much.
Thanks, Katrina.
Yeah, you're welcome. Thank you very much, Bola. So we've come to the closing. So I'll be handing over to Babatunde Ogunleye Johnson, who is from African Resource Center, a member of the American Business Council. Hi, Babatunde.
Yes, hi, Joseph. Thank you very much, and good afternoon, everyone. I just want to say thank you so much for joining. It's been a very fantastic session. Thank you very much, Bola, for the fantastic presentation. Going from the macroeconomic situation, globally, and what's happening in Nigeria, as well as what the current shifts has been with regards to consumer trends, and especially arising from the after impacts of COVID-19, and how businesses need to adjust going forward, focusing on some of the key that you highlighted. I just want to say thank you very much for that. And thank you so much to the American Business Council, as usual, organizing these very useful sessions with industry experts and leading thinkers across the landscape of business. Thank you so much for joining, and we look forward to welcoming you again to another session very, very shortly. Thank you so much, everyone, and enjoy the rest of your day. Joseph, I'd like to.
Yeah, thank you very much. Thanks for joining. Yeah, thanks, Bola. Thanks, Babatunde. We'll be sharing we'll be sharing the slides hopefully tomorrow with everyone. Thank you, everyone.
All right. Thank you, guys.
Bye everyone. Thanks, Tunde.
Bye. Bye.